Alright, so you've dabbed into crypto and maybe made some solid gains, but now comes the not so fun part. Taxes. Yep, the HMRC wants its share too, but don't worry, in this video I'm going to walk you through the 6 most common crypto tax mistakes people make when filing their taxes. No matter if you've just started with crypto or if you are a seasoned hodler, avoiding these pitfalls will keep you in the clear. So grab a coffee, sit back and let's make tax time a little less painful. The first big mistake, not keeping proper records of your crypto transactions. I know it's easy to get caught up in the excitement of buying and trading, but every transaction counts for tax purposes. So you need to log things like the date of the transaction, how much crypto you bought or sold, and what it was worth in pounds at the time of purchase. Without these records, it becomes a nightmare to calculate your gains and losses at the end of the year. And guess what? The HMRC expects you to have all this info ready. If you don't, you might end up paying more taxes than you should, or worse, get hit with a penalty for underreporting. So keep everything organized, whether it's using a spreadsheet or a crypto tracking software. You will thank yourself later. Next up, mistake number 2, ignoring what counts as a taxable event. A lot of people think that only selling crypto for cash is taxable, but nope, there's more to it. If you trade one cryptocurrency for another, that's a taxable event. If you use crypto to buy goods and services, yeah, that's a taxable event too. Even earning crypto through staking, mining or airdrops can trigger a tax liability. If you are not aware of these, you could accidentally leave out a big chunk of your taxable income. And the last thing you want is for HMRC to catch on to that mistake. So make sure you know what counts as a taxable event and report it all correctly. To get more infos on taxable events, watch our Crypto Tax Explained video, the link is in the description. Mistake number 3 is all about missing out on free money. Well, sort of. In the UK we have something called a capital gains tax allowance, which means you can earn up to £6,000 from capital gains without paying any tax. Then there's the income tax-free allowance of £12,570, which applies to all your income, including crypto earnings. On top of that, if you've had any losses from your crypto trades, you can use them to offset gains and reduce your tax bill. But if you don't claim these allowances and deductions, you could be paying way more tax than necessary. So make sure to take full advantage of those allowances. Here's a tricky one: mixing personal and business crypto transactions. If you are using crypto for both personal investment and business activities, it's super important to keep those separate. Why? Because business transactions might be taxed differently, and if you mix them up, it can lead to a mess when you file your tax return. For example, if you're running a mining business, those payments are considered income and you will need to report them separately from your personal trades. Keeping things clean and separate can help you avoid confusion and mistakes when it's time to file. One mistake that gets a lot of people in trouble is simply filing their crypto taxes late or incorrectly. In the UK, the deadline for filing your tax return is January 31st each year. If you miss it, you could face penalties, and those can add up quickly. Plus, if you submit your tax return with mistakes, HMRC might come back to ask questions. And trust me, that's not a conversation you want to have. To avoid this, you should double check everything before you file your tax return. And if you are struggling, it might be worth using some crypto tax software to make sure everything is calculated correctly. And finally, mistake number 6, not using a crypto tax calculator. With so many transactions happening, it's easy to make mistakes when calculating gain and losses manually. A crypto tax software can actually pull in your transaction data, figure out your profits and losses, and generate the reports you need to file with the HMRC. There are plenty of tools out there that can make this part of the process so much easier. By using one of those, you can save yourself a lot of time and reduce the risk of errors. If you like to try coin tracking for free, you will find the link for that in the description. so you don't leave it up to the guesswork. Let the software do all the heavy lifting. Alright, there you have it, the 6 most common crypto tax return mistakes in the UK. Keep your records organized, know what's taxable, use your allowances, and don't forget to file on time. A little preparation now can save you a big headache later. If you're ever unsure, don't hesitate to reach out to a tax professional to make sure you're on the right track. That's it for today. If you found this video helpful, make sure to hit that like button and subscribe for more crypto tax tips. And remember, stay smart, stay compliant when it comes to your crypto taxes, and see you in the next video.